Good evening, everyone, and welcome to Forex Street webinar. Today is 7th of June 2016. My name is Nenad, and today we will see Heiken Ashi MTF TPS system. That I'm the creator of the system, and I have created a system specifically for traders who want to try to trade multiple time frames. So before we begin, as always, our standard risk disclaimer. Online education materials are developed by Admiral Markets Estonia for a global audience, so take into consideration that information in this session is not suitable for everyone. If you want to get all corresponding information, visit admiralmarketsglobal.com, select your country, and contact an appropriate entity. Risk disclosure statement stating all possible risks associated with Forex market. By accepting the risk, you're also proceeding further with us. And Admiral Markets UK Ltd will take no responsibility for information accuracy. This is solely my opinion, and Forex is risky business, so this is not advice, it's my personal opinion only. Advice to all traders: download Admiral Markets Supreme Edition by logging into your trader's room. Believe me, it will greatly help you to enhance your risk to reward and entries. It will give you a necessary edge in trading. And also Admiral Markets officially best MT4 broker in UK. So today we will cover Heiken Ashi introduction, Heiken Ashi benefits, Heiken Ashi MTF TPS, and then I will move on to live charts. So we will cut to the chase, we will get to the point, no blah blah, no a lot of talk, so we need to get fast into the action. Heiken Ashi are they were firstly introduced to Western audience not that long ago, and the thing is that Heiken Ashi is originally Japanese, but the thing is it differs from standard Japanese candlesticks. In Japanese language, it means average movement of the price. Okay, so it's average pace of prices. Because of that, candlesticks are very good to identify trending periods as they lag. Then they are very good to identify potential reversal points and also classical technical chart patterns. Technique is different than compared to traditional candlesticks. So if you want to use Heiken Ashi, you need to be ready that it's a little bit different compared to Japanese candlesticks. Heiken Ashi modifies traditional Japanese candlesticks by sending the open and close through a calculation of the average. Now, benefits from using Heiken Ashi are multiple. So first, you see a direction. Simply because candles are color-coded, you will easily see direction. Usually, you will see blue or white Heiken Ashi candlesticks, meaning that candlesticks are bullish, or usually red candlestick mean that the direction is bearish. Comparing wicks to the body of Heiken Ashi, you can also determine the strength. It's different compared to Japanese, and I will show it on the chart. Wick on Heiken Ashi is very important. As you might know so far, or maybe you don't know, in my analysis and in my trading, wicks are always very, very important, and sometimes they are more important than bodies of candlesticks. Because of the color coding of Heiken Ashi candlestick, it's easily to develop an expert advisor. Now, Heiken Ashi MTF TPS strategy uses these indicators. Okay, so these are indicators that we use in this strategy. So Heiken Ashi candles and these combinations of EMA. Okay, we don't use SMA, we don't use other than EMA. So we have triple combination: 30, 60, and 100. 30 in exponential moving average is red. And by the way, all of EMAs that we use in this system are set at close. So EMA 30 is red, and EMA 30 defines now moment trend. EMA 60 is blue, and it defines a trend on a slightly above time frame. So we can say that that is a medium term trend. And EMA 100 is basically green, and it defines a longer term trend. And it's definitely, now judging from this, you need to know that definitely you always need to have these EMAs aligned proper way. If you don't see EMAs aligned proper way, then there is no setup and there is no trade. Also, we use stochastic 14-3-3 combination. Stochastics are set simple and low high, and we can use whatever daily pivot point indicator you have. So it doesn't matter, we will use indicator pivot point just for setting up those important levels of support and resistance. So for long-term trends, EMAs need to be aligned in the following order: EMA 30, EMA 60, EMA 100. That means red above blue and all above green. And also Heiken Ashi candles need to be blue. It's very important to say that this is, again, this is multiple time frame strategy, and because of that you need to go to two different time frames in order to determine trend and entry. Trend is captured on 4-hour time frame, while we look for entries on M15. Okay, for short trends it's a little bit different. So for short trends we have combination of 30, 60 and 100, but in the following alignment of colors: green above blue and all those above red. So green above blue, blue above red, and Heiken Ashi candles additionally need to be red. By aligning EMAs with color-coded Heiken Ashi candles, we will capture both trend and direction with additional momentum. Entries are made on 15-minute time frame. So we need to distinguish. 4-hour is used for making entries that are long or short, but in order to make exact entry, we use M15. So 4-hour is simply trend direction and a pullback. So we need to wait for a pullback, and then after we see a pullback, we move on to 15-minute time frame. For long entries, you want to see a change of Heiken Ashi candle from red to blue while stochastic is at or crossing from below 20. For short entries, you want to see a change of Heiken Ashi candle color from blue to red while stochastic is at or crossing from above 80. So this principle is very useful in trending markets, and because we use multiple time frame analysis for this, our chance to pick up a good entry is increased. So with using this, you actually are aligning trend, direction, momentum, pullback, and that means you're stacking the odds to your favor. Now, for people and for traders who are not familiar to trading, when you start trading Forex market, excluding all psychological things, positive, negative, you have 50-50% of winning. Now, by stacking the odds to your favor, you actually stacking the odds for a good entry. Good entry can be made always when proper indicators are aligned with a proper price action. For other things like target placement, taking profits, so on, it's about your psychology usually. Okay, it's everything about psychology, about risk and money management. But the thing is, if you want to have a good and precise strategy, you need to have all aligned. Indicators that show trend, momentum, and definitely loss of momentum. Loss of momentum is nothing more than a retracement. Because if you want to make a trend entry, you want to wait for a pullback. You don't want to buy into resistance or sell into support. That is what we don't do it, and that is what you should always restrain from. Doing that, you're effectively jumping the freight train, so you want to avoid it. Always wait for a pullback. This is an example of a long trend. As you can see here, we have our EMAs aligned. So we have red, we have blue, we have green. When EMAs are diverging from one from each other, you can see that the trend is strong. If you see that EMAs are intertwined, then you don't trade that market. You want to trade other market, and you move on to other charts. When I say market, I specifically mean about Forex pairs like euro dollar, pound dollar, AUD yen, Swiss yen, whatever. So those are different markets within the Forex world. I'm not talking about equities, indices, stocks, contracts for differences, futures, and so on. So specifically referring to Forex market. Additionally, when you have determined the trend, that a trend is to the long side, you want to see either a pullback towards these EMAs, or you want to try to make a long entry, but you need always to watch if the price is close to resistance if you want to make a long trend. So once more, you need to have EMAs aligned, you need to have candlesticks that are clearly bullish, or you want to see a pullback like this, okay, like this, and bullish candlestick. Have in mind that these are strong candlesticks that are blue and have wicks to the upside, and this is not a strong candlestick. This that looks like doji. This might look bullish, but actually it's not strong. This is a scholastic example of a candlestick that is strong bullish. So these are strong bullish candlesticks. This is weak bullish candlestick, okay? So you don't want to trade when you see this. When you see a pullback, or if you see that trend is really to the long side and you still have the room till next resistance, you can take the entry. Entries are made solely on 15-minute time frame. So if we have determined that the trend is to the long side, we zoom into 15-minute, and we want again to see EMAs that are aligned. They can be intertwined on a 15-minute time frame like this, because that usually signify a potential break of consolidation and next leg up into a trend direction. So EMAs can be intertwined on this time frame, okay, but you need to have a clear switch from red to blue candlestick while stochastic is below or crossing below 20 to above 20 like this. So this is an example of a long trade. You take profits on next resistance, or additionally, if the price breaks resistance, as in this example, you move your stop loss towards 2 pips below the resistance, and that is called profit stop. So with this system, you want to use profit stops. If you don't use profit stops, chances that you might be stopped out for break even or eventual loss, because this is an intraday system that applies to different time frames. Short entries are simply same rules as for long entries, but just the opposite direction. So for short trends, you want to see either strong candlesticks still having a room till next support, or you want to see a pullback towards EMAs while EMAs are still aligned in short direction. Eventually, you want to take a trend after a pullback. So this is a pullback, and this candle signifies end of pullback, this red candle. When you see this, you want to zoom into 15-minute time frame. Try to search for alignment of, or simply, as I said, it can be intertwined, but like this or like this. Okay, you don't want to be EMA showing opposite direction. So here it's very clear that EMAs are aligned to the short side. Here we see a pullback. Stochastics are at 20. After this blue candle, we see a red candle. When this candle closes, we can make entries. So this is very clear system, very precise. Rules are very clear. Rules are precise. You don't need to guess. There is no guessing here. You just want to take entries when your system tells you. Okay. So I will move on to live charts, showing you some live trade examples. But here, if anything is not clear, guys, you can ask me now. If everything is clear, we can proceed to live chart. So again, for all of you who are still don't get it, okay, 4 hour is our time frame of entry, time frame for trend, and 15 is time frame for entry. So longer time frame, we capture the trend. Lower time frame, we capture the entry. For long trades, you want to see Heiken Ashi candle color switch from red to blue, while stochastic is at or crossing from below 20. For short entries, you want to see a change of Heiken Ashi candle color from blue to red, while stochastic is at or crossing from above 80. Because this is a system, you actually want to wait for a candle close. So on 15 minutes, you wait for the candle close, and if the rules are respected, then you enter the market. So you don't enter the market on a leaving candle. Okay, this is different than what we do on session recaps. Session recap is Camarilla MACD, my method also, and this is actually MTF TPS Heiken Ashi method. So indicator base, you need to respect the rules. Okay, one more example of a long entry, and this is an example of a short entry. The system, as I say, uses 3 different combinations of EMAs, and because of that, you have additional chance to make a very good and precise entry. Okay, now this all will be shown on live chart. So here, guys, this is a live chart. This is a euro dollar 4 hour time frame, and let's say that this is a pullback here. Okay, this is a pullback. See, trend was very to the short side, and here we had a pullback after these blue candles. 4 hour candle was close with red color. So this is a pullback. You zoom into 15-minute time frame, and you can start searching for short entries. Okay, short entries are made, as I say, when you see alignment of, or at least small intertwined alignment of EMAs. So first entry, the chance was exactly at this point. So here we had a short entry opportunity because candles made a pullback towards blue or green EMA. So this is where you want to see a pullback, and this candle switched from blue to red. Stochastic at this moment was at 80. Okay, so here you can see how the price went, and actually if we now I will go okay, scale fix. Okay, and here you can see entry. Okay, and potentially 20 pips could have been made because we had a trend change. Okay, we had a trend change to the long side. Now additional examples, we will move on to other pairs. You can trade wherever you want to, really. This is mostly you should trade major pairs because majors usually show best trending movement, but you can also, when you get familiar with the method, you can also switch to other pairs. Let's say that you wanted to trade, this is always best setup when you see a pullback towards the bottom and you see a blue candle. So this is where you should start looking for long entries. Okay, now zoom into 15-minute time frame and start searching for entries. Okay, we need to see where was, okay, here we had basically a potential breakout, but you see there were these EMAs were intertwined, so you might have an entry here, but best entry is made when you see also alignment on 15-minute time frame, and this is next entry here. So see a pullback, okay, here, and you see how many pips you could have made with following the trend. As for stop losses, guys, ideally your stop loss should be in between 20 and 30 pip. Where you place stop loss, you always place it for long entries below the bottom EMA, and this is, in this case, it's moving average. So you count the distance was like 21 pip, so below it you can always use in between 20 and 30 pip stop loss. Recommended risk per trade is 0.5 to 1%. Okay, that is a recommended risk per trade in between 0.5 and 1%. You can also watch for additional entries. As I say, if you see that there is still on 4 hour, there is still room towards next resistance. Okay. Targets are always close to next resistance levels. Okay, so next resistance is the target, but additionally, you can always watch 4 hour chart for potential interim targets. So if you made your entry here, next resistance is there. See, so you can always measure resistance by drawing manual levels of support and resistance as I'm showing you. Okay, so in that case, you can also use the system for scalp swings. Okay, let's say another example, we can go with Australian dollar trades. So here we would probably look for short trading opportunities when we open a 15-minute time frame. Okay, here, yeah, this is one possible entry here. Then we had a drawdown and another possible short entry here. Okay, see, it's much better because stochastics are more close to 80. Even here, we could have made a short entry. Okay, but beware, when price starts to range, there always can be an indication of a trend change. Okay, and always watch for 4 hour time frame for targets. You see, we clearly have support levels here, but always try to do the manually drawn levels of support resistance as I am showing here. How to do it? Actually, it's very easy, guys. You just need to open a 4 hour time frame and watch previous swings. So if we go to the long side, we have previous important swings, obviously very clearly shown by our Heiken Ashi candles. Okay, here, see how it's showing previous swings, and usually those previous swing points will also be important in now moment price action. Okay, now moment price action. Usually there will be some counter trend trading opportunities, but because this is a trend trading system, you don't trade any counter trend opportunities, nor you don't want to use this system for counter trend moves. So you always go with a trend, always and always. This is an example of a minor pair. It's CAD yen, and now you can see why I prefer trading majors. Okay, because most of the time on these pairs you will see you won't see clear trends. You will be seeing EMA spirals, and there won't be a very clear direction. If you see a clear direction, like in this example, then you can start to trade it. But sometimes you will not see clear direction. It might range. Okay, so until you're not familiar with, you get familiar with minor pairs, stick to major pairs. And I specifically mean all all dollar and yen crosses. So you can even trade odd yen. It's not a major pair, but it's one of my favorite pairs, and you can trade it because usually it follows equities. All yen pairs follow equities perfectly, and when equities start to move, you will also see movement on odd yen and specifically dollar yen. You can always scan with this system, you can always scan for potential past, so you can flip the charts to the left and then watch how it behaved in the past. These indicators are not repainting, so you will always have a clear picture. Okay, guys, so one more example here, and you can ask questions, and if anything is not clear, I can repeat again. Okay, so let's go step by step again. Open 4-hour time frames, watch the trend. So clearly trend is to the short side. Green above blue, above red. Draw manual support resistance levels. For this occasion, we need to wait for candle to close red in order to take short trade, but still red needs to be below blue, or if red goes above blue, we simply don't trade it. So let's use this example. Okay, we can use this example here. So previous levels of support were definitely here. See, so we want to trade this candle. We want to trade this candle. So first we chart manual levels of support here. So previous swing points, very obvious here. Okay, very obvious. Okay, and then you watch for indicator. You open 15-minute time frame, okay, and you can start watching for 15-minute time frame entries. Okay, here there is a good entry. Okay, here this is okay entry, not so good, but okay, not so good, but okay, and this is much better here. See, much better entry. Here, EMAs are not aligned yet, but I said it can be intertwined. So this red, when it spikes above this on 15 minutes, it simply indicates that a pullback is a bit stronger. But if the trend is on 4 hours still to the downside, you can simply get into this trade, because this red spike just indicates that there is a bigger pullback. Okay, here entry, here entry, here you have another entry, here you have another entry, here you have another entry, and so on. So guys, the point of this system is that you can actually go with intraday positions, and additionally you can also go with scalp swing positions. Now, for all of you who don't know what a scalp swing is the term I use for making trades that are something in between scalps and positional trades. So with scalp entries, you usually want to make like 10 pips. With scalp swings, you can make 20 pips of profit. With intraday positions, you can make from 50 to even 100 pips depending on the pair. Of course, if you trade GBP New Zealand or GBPN, your targets will be higher than GBP dollar, because GBP New Zealand and GBPN are pairs that are much faster than GBP dollar. Okay. For slower moving pairs, you can always go for lower amount of pips, but I advise you to try, as I said, to try to trade major pairs with focus also on yen pairs. Now, guys, if you don't have any questions, that will be everything for me. So the system is very clear. As for profit targets, let's say 15 minutes, you go with manually drawn support resistance levels, or you can go with indicators, resistance and support daily pivot points. For moving profit stops, again, let's say that you have made a long entry here, just for an example, guys. This, for example, is a long entry here, and your profit obviously is not, yeah, it can be 27 pips. It's not that bad, but you can also expand your profit. So if your profit is this support resistance line, and you see that Heiken Ashi is breaking through the resistance, you simply move your stop loss that should have been placed here. you move your stop loss 2 pips below this resistance line, and you actually ride a free ride. If you see that price is breaking through R2, again, you move your stop loss to 2 pips below R2, and again, you're riding a free ride. Profit stops are very, very necessary, especially if you trade intraday, and I always do it. And one of the reasons why my accounts are successful is simply not because I analyze and I trade a price and apply good money management. It's also because I use a good risk management. That means lower risk trades with applying profit stops very, very occasionally. And don't forget, profit stops are applied also by big bank traders. It's the fact, and that is the way to ensure your profits. For example, pound yen, last night I gave an entry on session recap. It went 55 pips in profit, and I simply managed to get like 45 pips on pound yen before pound made an unusual spike to the upside caused by algos cutting short trades. And actually, that is how you can apply profit stops to your target. That means that you are riding a free ride. Additionally, what you can do is, if you go with a slightly bigger lot size, but remember, risk should be always fixed. Okay, stop loss is not fixed, your risk is fixed. If you go, let's say, with 0.5 lot size, you can always opt to scale out. Let's say you can scale out here and put the rest to break even, and then enjoy a free ride. Okay, so those are tips and tricks that you can also use. Okay, I don't see any questions, so I assume everything is clear. If anything is not clear, you can always email me on torrentialfx@gmail.com, and I will be glad to answer. Until then, guys, okay, as I always say, trade safe. Cheers, everyone.